Everyone, welcome to today's video. We're going to talk today about technical indicators that are good for long-term investments. Stick around. Everyone, welcome. Please do subscribe, hit that bell button, all kinds of good stuff. I love you all. Thank you for the growth in the channel and the support. So, going to talk today about investments because technical indicators do help you even if they are lagging longer term time frame. So we're going to be focusing on the weekly time frame to figure out certain things, and I'm going to give you some indicators that are awesome. Some are paid for, some are free. All of them are free essentially, apart from one. So let's talk about it. So the first one, just to kind of give you a little bit of a lining graph of this, all indicators when you go to the weekly time frame become quite laggy. And there is certain tricks and tips, but I'm not going to go into that in terms of how to catch it early. But if you are really at a basic standard and you are learning how to invest and you want to learn how to do it effectively, you need to kind of leverage what the chart's telling you on price movements based off past data. So first one is, we zoom in, we're going to look at the moving averages. Okay, you can have whatever moving average you want, just depends on you. Now there's some different combinations. I use a certain combination, but I'm going to show you some other ones as well. So we're going to go, we'll remove these ones. Okay, there's different types, okay, of indicators, right? We know that. Different types of moving averages. There's moving averages, there's exponential moving averages, whole moving averages, there's weighted moving averages. But these are really, really good to get you a trend. So all you need to do, go to indicators, okay, put in moving, and you're going to get a few, okay. In my opinion, depending on what you're going for, there's different ones you can go for, obviously. The moving averages on the longer time frames are good. The 100, the 50, for example, as well as the 200 are very, very good. So let's put on 1, 2 on here. Two moving averages. We're going to put a 50. Cool. And we're also going to put on a 100. There you go. So, as an investor, you can maybe look at certain things with this. Now, you can obviously change this, make it faster, make it slower. This is a weekly time frame, so it is lagging. If you then go over to the daily time frame, it's going to be quicker. As you can see, the direction of price, where it is moving to, when it turns around, and you can use that EMA 100 as your guide or the moving average 50 as your guide using the crossover method if you so wish to. That is one way to figure out if an investment is potentially going to go up or going down. Now, to delete these off again, you can go on to the shorter, lower time frames as well. Again, if you want to just stick on the daily, you can. If you've got in MA again, go to the exponential moving average and put 2 of these on. You can use different sort of elements. So, in my opinion, you could looking at a 20 moving average. It's nice and tight. Then you could start looking at maybe a 55 moving average, which changes it up a little bit more. And then when you start zooming in on this, you could see quite quickly how price is moving within the crossovers of these to give you a trend, a very, very simple trend. Now, there is millions of combinations you can use. I'm not going to give you them all for you to find and develop your own method. There's plenty out there. You can use Fibonacci numbers, you can use round numbers such as the 100, the 200. Some people use a 500 moving average, all kinds of stuff. And the length is based off the day on the past data. So that is the moving averages. Really, really simple. And if you want further reading, check out Investopedia. It gives you the whole data on how the formulas are worked. It's really, really handy to know this sort of stuff. But EMAs, moving averages, weighted moving averages, they all have different formulas. They all lag in different ways. They are lagging. They go off past data, so be careful on that. You will not get a great price point. But if you're looking for long term and you want to get in on the curve and it's going that way upwards, it's a great place to start. So the next one we want to get involved in, we're going to talk about the RSI. Now the RSI, let me just move these down a little bit. Just to give you an information commercial on the RSI, it is a relative strength index. It will give you an insight of how strong an asset is in terms of its volume, in terms of momentum, all kinds of stuff here. And again, as I say, you can find out more on Investopedia. It's a really good website. It gives you the whole information of how it all works. It's based off a overbought, oversold theory. Not the greatest theory in the world, but ultimately you can figure out what direction the market is going based off looking at these. So if you look at the weekly, for example, right, just to give you a bit of an insight here. Now, I'll just move this a little bit lower so it doesn't look too bad. When you start looking at any sort of investment and you're looking at how they move, it goes from the bottom here all the way up, right? This is oversold, right, where it's flying down. This is overbought, okay, over these regions. Obviously, the purple region is the kind of the medium area, where the top area of this is bullish, the bottom is bearish, and the middle is kind of neutral, okay? So when it starts trickling up to the top, signs it's overbought, this is where things could potentially top out. And as you can see here, when it starts going down, you can see what's happening. Kind of obvious, really. If you go to the daily, you can see it a bit more clear. So you can look, for example, let's look at this region here, the top, right? You can do certain things with this to figure out certain elements. So if this is going down and the price is going up, it's called a bearish divergence. Likewise, if the price is going down and the momentum's going up, it is a bullish divergence. You can figure loads of things out. That is more complicated. I don't want to badger you too much. But if you're looking to invest, and the way you looking at investing, you need to see that this is creating a trend. Basically, use a trend line. If you start seeing that certain things are happening within this, and you start seeing stuff like that, for example, happening, and that is level on a period, and you're thinking, well, there's a potential buying opportunity here, you can use that as a potential entry point into this region, and obviously it trickles up and that carries on going. So that is the basics of the relative strength index. So I hope I haven't confused you too much with that one. The next one we're going to talk about, let me just get this up and flying away so it looks neat and tidy. Bear with me. I need to do that. There we go. Ooh, the MACD. The MACD is very, very similar in sort of a crossover method and a very, very good metric in terms of figuring out what happens to a price of an asset when things move. Now, it works in a similar way to the EMAs. It's using EMAs, it's using the 12 and the 26, but it also has a histogram. It tells you when momentum is changing in any asset. So if you go to the weekly time frame, you can see this very, very clear. Look at this. Bowing up, histogram is ticking, crossover. Off you go, my friend. Very, very easy, very, very good for beginners, the MACD. I highly recommend it. It is a moving average convergence divergence tool. Again, further information on Investopedia if you want to learn the nooks and crannies on it. But ultimately, you cannot go wrong with this. But what I will say is patience is required to wait for the crossovers to happen. Ultimately, it is lagging. Look at the crossover here. The sell point is on the weekly at 11,000, which is a long way away. So you will have to adapt and change the time frames as you so wish to. Again, if you're looking at this here, you can see here quite clearly current price action, crossover happened up here, histogram, big massive warning that momentum is changing on the daily time frame. Again, look at the previous price action, the crossover going up, it trickled nicely up, starting to turn back a bit, upwards again, and again a massive spike down. So it does work very, very well for a long-term investor, though. It is great as you're going to get a lot less of these actions happening because it's a weekly time frame. Look at that, 2018. The next crossover essentially was in March 19, a long time ago, and then that huge spike, so huge profits there. And again, it kind of paints a picture of where we could be heading for the cryptocurrency market. We could be in a lull for a bit of a long time now. So finally, we're going to talk about the stock RSI, the stochastics. There we go, get my words out. This one's a good one. And then we're going to go to the prize possession, which is coming up very, very soon. So this again is very, very similar to everything else I've realistically talked about. So this is a bit more complex in terms of how it works, but it works on the same sort of basis of both a crossover like the MACD and also the ranges and the levels like the RSI. So it's a bit of a combination of both. Using moving averages, it's very, very handy. And it does work very, very well on the longer time frames. What I will say about this indicator on the shorter time frames, it can cause a bit of confliction, can be a pain, but it works in a similar sort of way. When the blue line is below, that is bearish. But also when you look at the levels in terms of how high it is, and it starts trickling down like that, it's bearish, so it's like a sell signal. Again, likewise, if you're looking to invest, crossover in these lower regions, that is your entry point. Again, sell points, these top regions when it goes bearish, you can start looking at selling, start thinking it's holy fucking hell, it's topping out, it's looking a bit shit. Again, likewise coming down, back up. So it works in a very, very similar sort of way. Not too hard, not too difficult to kind of comprehend how it works, but it does work incredibly well. So that is the default indicators, okay? What you can get with TradingView for free as normal, really, really handy to use. And what I will say is this, there is some real good ones out there, but I have also helped to develop a one that combines a load of indicators within it to gain momentum. It's called Hitman. Now, if you go on the website here, you can try it for free. If you go onto their try free version, there's a free version on TradingView. It works very, very well. It is default. It has just default settings. You cannot change them. But the paid version does have custom settings which you can change the sensitivity of it, and it works very, very well. So to just give you an insight of how it works, we'll put the tester on. This gives you bull and bear signals of when things are about to hit the fan. It works very, very well. As you can see here, look at that. It hits the top here on this setting. This one here. So imagine having to be able to know that this weekly time frame is looking pretty horrible. Okay, this whole region's like, oh, you should be looking at selling. Amazing. Again, if you go down to the daily time frame, you're going to see where things change. Buy here, sell up here. Obviously, buy in here, obviously it tops, turns around, sell here. There's a load of different customized settings, and you can change these settings, right, for any sort of time frame. So you can play around with them. You can make them less sensitive. You can make them more sensitive as well. So it does more signals for you. There's so much you can do. You can play around with all kinds of little stuff here. Now, if I change this to say 500, for example, to go over the last 500 candles, it can go absolutely crazy. It depends on you. It depends on you as a trader or as an investor of how it all works. But look at how clever this works. It works very well. Look at this for a range here from the December regions, buying at 6,600, sorry, and being able to sell at 10,000 and then get this impending doom. Unbelievable. So it is relatively cheap as well. It's only a small monthly subscription to get involved in this, but it works on every single time frame. Once you've customized the time frame for you in your settings, you can be able to trade this, invest, do whatever the hell you like with it. It works incredibly well. But again, if you look at the likes of the weekly time frame on this, and you're looking to get involved as an investor, and you're looking at certain ranges thinking, wow, look at that for a buy zone, that's unbelievable. Cool. You don't have to use the sell signals. You can just sell on your own back. If you are happy with going up to 14k and you're thinking, oh my god, that's amazing, press the sell button. It's an investment only. So that is today's video done. I hope you enjoyed it. It's a bit different, I know, but please do get some backing and support behind it. Obviously, I want to try and teach people that as best I can. And if I'm giving you some ideas to kind of become a better investor, to see certain things with momentum, that is always going to be good. So please do like, please do leave a comment if you so wish to. Hit that bell button and press the share button. See you later.